So Geoffrey, tell us a little bit what you found in terms of Apple's price increases and how that may end up hurting consumers and just how far that's gone.
Being loyal to Apple is really starting to cost you more and more money. Here's a stat to think about. In 2014, the average American, when they bought a new iPhone, spent, I wrote the number down, $634 on a new iPhone. At the end of this last year, they spent $898. That's a gigantic jump in just 4 years. And when you compare that to Samsung, that number only went up 150. Other Android phones, it actually went down slightly. So the price of being loyal to Apple, not just with the iPhone, but across its whole line of products is rising fast. As you said, faster than inflation, and faster than almost everything else we measure in the economy.
But maybe, Geoffrey, you're comparing apples to oranges, pardon the pun. So what? BMW, Gucci, they don't cut their prices. They're a premium brand. Apple considers itself a premium brand.
It does, but here's the problem. Here's Apple's problem in a nutshell. Do you need a new iPhone? Probably not. Do you even want a new iPhone? The latest ones haven't been that great. The problem is that the products haven't been keeping up with these premium prices.
I don't know. My husband wakes up at 3 o'clock in the morning when the Apple products go on sale. Quint, average selling prices rising was why investors were loving the stock for most of last year until they decided to take away the unit iPhone numbers from investors. So is this a problem or a positive for investors? The prices are up.
Well, it was a problem, and now it's a positive. And let me give you that specifically. We came on this very show prior to Q3 earnings, and exactly what the other guest was speaking about was our concern, the price of those phones, and we thought that would slow down. We had no interest in buying a stock with that high of a valuation, with what we saw as slowing revenue, slowing earnings because of those numbers. Now you have a stock that's down 40%. And this is the time where it's attractive. Investors or the market are always going to shoot to the opposite extremes on the upside and the downside. We feel that's happening right now, and the investors are going to view this as a positive if they are willing to step in and buy one of Buffett's favorite names here, 40% below where they could have just a few months before.